the folks at the SEC who, are unfortunately not back at the office, so they will not be joining us for the most part. Commissioner Hurst agreed to join us tomorrow, which is fantastic to jump in. I had a great conversation with our new director of Corp Fin, Jim Maloney, about the Institute and how important it was to his career and what he remembered being here back when he was earlier on in his career when he was at the SEC, which is an experience that I had, and how important this was. He was really looking forward to being here, but also for this being his sort of first public announcement. They did agree that hopefully when they get back to work and they have time, that maybe kind of doing a webinar for the group to kind of catch us up. But thank you to all of them for trying, because I know they really wanted to be here to do this. I think I could say this publicly, that this may be the man to my left's last year as chairing the Institute. And I wanted to say a special thanks to Keir for all that he's done. I don't have a plaque or a trophy for you.
Where's my platter? I want my platter and a watch.
Not even some flowers.
Right.
But let me offer you this. My continued admiration and appreciation. Seriously, as you were talking about, or as Grace was talking about your bio, I met Keir over 20 years ago when I joined the staff in the Division of Corporation Finance. Keir was already kind of a local, well-loved member of the staff, and I quickly got to know him. We've been friends for over 20 years, had a chance to work with him, and just listening to his career path and all that he's done, thinking back from the days when we were sitting in the audience watching the folks up here for our industry, honestly, and he continues to, with everything he's got going on, as busy as he is, to be involved in this and many, many other things. So thanks, Keir. It's been great working with you. Really going to miss you.
Great, thank you, sir.
We're not going to let you go. You'll probably be back.
That's fine. I'll take that.
Okay, so with that, we're going to kick off, as Keir mentioned, there's so much going on in Washington. When we kicked off this new administration, we saw very quickly that we had a very different sort of approach. Initially, Commissioner, then Acting Chair Ueda, and then eventually when Paul Atkins returned to the SEC as Chair of the SEC. Lots of folks have used this as an opportunity to kind of think about ways that perhaps we could change regulations, change rules, and we have what I would say a very ambitious regulatory agenda, and lots of people trying to make suggestions on that. So when we're thinking about kicking off the Institute, we thought, let's find somebody who is really at the pinnacle and in the crossroads of all of that, what's going on. And we very quickly aligned that Una Choi would be our kind of kickoff speaker. Una is the Senior Vice President and Global Head of Regulatory Operations at Nasdaq. She has over 25 years of experience in both private practice and in public service, focusing on capital markets, securities regulations, and market risk monitoring. At Nasdaq, she's responsible for overseeing sort of capital formation, maintaining efficient, orderly marketplace. She manages a team both in the U.S. and Europe, is responsible for assessing qualifications for listing companies, ETFs, options. She also leads the global surveillance program over equities and ETFs. She really has a sort of very broad team and is very much involved in all that's happening at Nasdaq. Prior to joining Nasdaq, she's got deep experience both in-house. She worked at the SEC, and she was also a partner at Hogan in Washington. So, and by the way, she started a career at Goldman Sachs as an analyst out of college. So could we find a better person to kick us off to talk about kind of what's going on in the market? So maybe I'll start with that question, Una. Could you say, what are you seeing at Nasdaq? What's happening in 2025? We were thinking this year was going to be a boom for IPOs. Has that happened? What do we see coming up? Give us your take, please.
Sure. Thank you. Thank you for having me. It's a pleasure to be here with you and to talk about this year in particular, which has been incredibly dynamic. And, dynamic because of the policy making that's taking place, but also because we have two really important transformations occurring. Digital assets and Gen AI really coming together and affecting the financial ecosystem in ways that we have never seen anything affected before. So very exciting. As you mentioned, I get to work with our US and European teams on regulatory operations. And the goal that we have, especially as an exchange, is similar to the SEC and other regulators. One is to promote and facilitate capital formation. The second is to maintain fair and orderly markets. And the third is investor protection. So those are the principles principles and the goals that we have, and it's been incredibly dynamic. US is one thing, but Europe is really thinking about their savings and investment structure. There's a lot of policy initiatives to generate interest in capital formation in that region. And of course, Asia is increasing in ways that are also very different from the two other regions. And India, just in 2025, had the most number of IPOs in its markets. So we're in an exciting time. I get to sort of think about all of those different things coming together and converging. And in DC and in the IPO landscape, I would say we really had a great sort of momentum going into 2025, and we were starting to see that really take off in first quarter, second quarter, and third quarter was actually most active since 2021. So on Nasdaq alone, we had close to 100 listings, including SPAC IPOs, raising over $20 billion. Of course, unfortunately, the government shutdown has created a little bit of a challenge in the sort of recent weeks. And so we are hearing a lot from issuers in terms of thinking about whether they want to sort of take the plunge and go to the markets or wait until next year. But I think there's a lot of questions being asked. There's a lot of work that's being done by the SEC, now that we have Chairman Atkins, and also all the directors have been made for the main divisions have been hired. So I think we're going to see a lot of the Reflux agenda items really coming to fruition in the upcoming months when the government reopens again.
You mentioned the IPOs in India as an example. What's the global regulatory landscape for those? Are those IPOs that are being listed in the U.S. or are they being listed in India?
Yeah, so by far, of course, the U.S. is the market of choice for all of the different issuers who are considering an IPO. And so we have the most number of large cap IPOs as well as the proceeds and premiums that come with that. But you do see India being very active, as I mentioned, with the most number of IPOs in 2025. Hong Kong has raised, second to the U.S. in terms of dollars raised in terms of IPO proceeds. Europe has lagged behind, but the bright side for Europe is actually the Nordic region, which is where we Nasdaq have exchanges in Sweden, Finland, and Denmark. But the Nordic region has actually has seen an increase of IPOs by 30% since last year, and is really very active with some of the larger IPOs coming into some of the larger companies coming into the market just within the past few months.
Can I jump in? So,
Yeah.
A couple of years ago, I had a privilege. I was working with a foreign-based energy company that was thinking about doing a listing, and they were thinking about a couple venues. They were looking at London. They were looking at their home jurisdiction. They were looking at the U.S., both Nasdaq and the NYSE. And one of the things that became really clear to me in that process was the interaction between kind of the regulatory choices that each exchange is making and how attractive that made them to potential listings. And so when you think about that relationship between regulations and governance approaches that Nasdaq may adopt or abandon, and the relationship between that and companies that want to list, like where are you now in terms of competition with other markets, other potential listing venues? And the one thing that comes to mind for me particularly is around things like ESG and DEI and just broader shareholder rights, which I think have been really reopened in terms of examining what things exchanges are going to require or expect of listed companies.
Sure. I mean, we think about regulation as something that can be scaled and be implemented in a smart way to promote technology-driven innovation and also to be able to provide investors and issuers with different choices. And so beginning of this year, actually, with the administration change, what we did was go out to thousands of issuers that we have listed on our exchange. We did a survey of how should regulations be set up to help the financial ecosystem and issuers and investors in particular. And we received the results of that survey, and it was very clear there were three themes that are coming out of it, which was scaled disclosure relief. Second was proxy reform. And third was smart regulation, including litigation reform and the ability to sort of interact with the PCAOB and the audit quality. So those were the three sort of main points. And the reason why companies were so focused on that is because of the regulatory burden and the costs that are associated with becoming a public company. And so when you think about the U.S. as the choice market, the best market in the world to be able to list with the capital formation abilities, with the liquidity, and with the transparency that we have, those are things that we have to pay close attention to make sure that we're able to continue to attract, and which then allows the U.S. economy to foster. And especially with foreign issuers, we have $13 trillion of foreign issuer capital within the United States. So that's an important competitive advantage that we have. And we also have to think about it in the context of the public markets, and is that being fostered in a way to generate more capital, more choice for investors, and more ability to raise funds for U.S. companies and other companies to be able to grow their business, innovate, and be competitive. And it's a sort of this virtuous cycle that we have. And so if you take a sort of step back and look at the market, 25 years, the number of public companies declined by 35% in those 25 years, going back to 2000, from about 7,000 to 3,500. At the same time, the number of private companies increased by 475%, from 2,000 to over 11,000. So there is something happening in the markets, and I think something that we need to pay attention to. And one of those sort of the benefits of having the current leadership at the SEC right now is they're focused on that. Chairman Atkins has said, we want to make IPOs great again. The Commissioner Ueda, when he was the interim acting chair, really focused on capital formation and talked a lot about some of the same themes that we have highlighted based on our issuer survey, scaled disclosure in particular. So so I think all of that work that has been done and that will continue to be done in the upcoming months and years can help enhance the competitiveness of the U.S. capital markets even more. And I think we're sort of entering an exciting time, especially looking at the Reg Flex agenda and some of the things that have already been discussed publicly with the commissioners.
So I want to go back just to make sure. So you said proxy, audit quality. What was the third
So
category?
scaled disclosure, which is a big
disclosure.
one, and I'm happy to go into some of that in more granular detail. Scaled disclosure, proxy modernization, and smart regulation, which encompasses litigation reform as well as PCAOB and other sort of factors. But so talking about scaled disclosure, for example, there are many acronyms like, emerging growth companies, small reporting companies, WICSEs, and different thresholds when you look at those. And they haven't changed in a very, very long time and haven't even been adjusted through inflation. And I think both practitioners and those at the SEC, and including myself, who I actually spent 1 year just focused on WICSE matters alone at the SEC, we have to have a matrix to figure out what goes where and what the dollar amounts are and things of that nature. But when we engage with our issuers, we often hear that the sort of the mid-cap companies and smaller companies have disproportionate sort of burden of having to comply with the disclosure requirements. And it could be scaled a lot better. And I think that was the intent when these rules were put in place decades ago, but they haven't been updated. So I think this is one area that could really use some refreshing. And when you look at sort of the WICSE or even accelerated filers, non-accelerated filers, large accelerated filers, you'll see that the vast majority of issuers probably fall into the large accelerated filer. So what's the, how should that be sort of divided up and reallocated. And then with emerging growth companies, I think there's a question of, is the revenue threshold really high enough, or is the time period long enough? Do you accidentally trip up getting out of the benefits because you have a one-time revenue that comes in? And should that take them out of sort of the special status? And then with smaller reporting companies, how does that fit in with the accelerated filer definition? There is a lot of confusion around that. So we're hopeful that the scale disclosure reform can help with and provide, better clarity for reporting companies so that they can really focus on what's important to them, which is growing their business. And I know, this is probably the audience and us, as security lawyers, this may not go down very well, but I have literally had this, conversation with an issuer who said, look, it was a choice of me hiring a securities lawyer, having the company hiring a securities lawyer or hiring a scientist, and we had to hire a securities lawyer, but that means that they can't use the funds to grow the business by hiring a scientist. So those are tough choices to make. Proxy reform. I think there's sort of low-hanging fruits that the SEC could take into account. So, do you really need to have all those preliminary proxy filings? Could there be an expanded list for routine matters?
Definitely.
And 20-day broker search, that seems really outdated to a lot of people when we have 2+1 settlement cycles. And things of that nature, I think, that could be viewed as low-hanging fruits. And of course, there's the broader sort of topic of proxy plumbing. NOBO, OBO, who's paying for what, who's paying for, mailing to shareholders.
You're speaking our love language right now. It's like my love language.
So a lot of work to be done there, probably where technology could play a key role. I know we're going to talk about digital assets and tokenization, but I do think that blockchain technology could be worked into the proxy plumbing to be able to facilitate transparency, as well as sort of the engagement between issuers and shareholders.
Yep, everything that was going through the Nasdaq put out this capital markets white paper, which I suggest you read. It gets into a lot of detail.
Yeah.
I mean, thankfully, a lot of this is on the agenda, right? I think we're expecting that many of like Nasdaq asked and the SEC is going to answer, which is good. What about biannually reporting, semi-annual reporting? You didn't hit on that. As you know, that's something that the president tweeted or whatever he does, and then the SEC picked it up very quickly. And I heard it was something that they were sort of busy working on before they got sent home. So does that really, we did this for a client recently who's a foreign private issuer that said, we're not obligated to do quarterly reporting, quarterly reporting, but we do. Could you do sort of a back of the envelope, survey? Every company, every major foreign private issuer is doing quarterly reports. They're not doing 10Qs, of course, they're not obligated, but they are putting out earnings releases. So is this really going to be something that's going to be used? It looks like what the SEC will likely do if they propose it and get it adopted would be allow people flexibility. That means you would do a 10K and maybe a 10S, whatever it's going to be called for the 6 months. You wouldn't have to do the 2Qs. Is that really going to make a difference of being public versus private? I wonder.
This is one of our recommendations as well, just streamlining the reporting process and potentially getting rid of the quarterly reporting requirements, especially depending on the size of the company and the type of companies. So, when you have a biotech company or a company that's going through FDA clinical trials, you're not going to have movements from quarter to quarter. And does it really make sense for the company to be focused on 10Q preparation, or can they use that time and effort into something else? And then there's also a broader sort of question of, are you thinking about, as an issuer, long-term goals versus trying to meet that mark on a quarterly basis? So, I think we were really pleased when the president made that tweet. We were also very pleased when the SEC took that up very, very quickly. And I think you're right, Brian, in that the SEC, when it comes back, will be very much focused on this. And, Nasdaq and other exchanges, I'm sure, will be working together with the SEC to think through this and come up with a better sort of framework for disclosure reporting. And another thing to also mention is that, it's really about disclosure, but is it really providing material information to the investors? And sometimes more information can create a lot of noise that is hard for investors, especially for retail investors, to sort through. So I think it's striking that right balance and having a smart sort of system. And we do think that the modernization of the reporting process will help with that.
Can I ask just a follow-up, maybe to slight challenge, friendly challenge?
Sure.
So from the perspective of consumers
Yeah.
of that information, so I'm thinking about, we've got 20,000 financial advisors,
Yeah.
you've got millions of clients, you've got analysts out there, all of them are consuming this quarterly information in order to advise clients on hold, buy, sell, whatever it is. Do you have any concerns around if more companies were to go to semi-annual versus quarterly reporting, that might have an impact on the consumers of the information or the functioning of the markets, right? Like right now, we have the advantage of a uniform process. Everyone is expecting the quarterly information, and that informs the way that people are engaging with each other in terms of transactions.
Yeah.
What are you hearing on that side of the ledger?
Yeah.
Can I add one thing?
Sure.
It's not necessarily uniform. But how many trillions of dollars of foreign private issuers? They're putting out 6Ks, but they're not doing 10Qs. Look, at the end of the day, do you really think whoever whispered in the presidency here was concerned about doing a 10Q? Sat up last night looking at a bunch myself last night. There's really not that much to it. And I was a former CPA, did it too. Isn't really what business wants. They want the SEC to ban analysts making predictions of where the earnings are going to come out and companies giving projections. That's really what they're concerned about. I'm managing my business to what the street thinks I'm going to do this quarter. Is it really the 10Q that's making the difference? I could be wrong, but I doubt it.
But staying with that, here's the question though. As things happen over the course of the year, if you go to a world where it's all optional or all maximum flexibility, do a quarterly or semi-annual if you want to, is that actually better for the market? Is that actually better? Like again, we file 10Qs. I do not mind the idea of not having to do the 10Q, but I also am worried about what that might mean for the markets.
Sure. I mean, I think different sort of frameworks can develop depending on the type of company we're talking about. So it could be that the earnings release could be filed and serve as that quarterly update. There's, of course, ongoing disclosure requirements that companies will have to provide updated information to the extent that there is a material development that occurs. So I think there are different ways to sort of get to the point of addressing sort of this unnecessary work and burden that some of the companies have that does not provide meaningful information to the investors. And then there could be a hybrid system potentially with earnings releases really serving as the quarterly report without having to file a separate Form 10Q that doesn't add any value to the investors. And I'm sure there will be a little bit of push and pull on this. Kira, as you said, there are constituents who may want to have that information, and the issuers will have to decide how to address that with their shareholder base and provide the information that they need, both from a regulatory standpoint and from probably marketing and shareholder engagement standpoint. I think the question is, should the regulation dictate a mandatory system versus should there be flexibility and scalability of what is required on a quarterly basis?
And insider trading. If you're not putting out quarterly information, when are you going to let people trade? I mean, there's lots of reasons why the vast majority of companies, foreign private issuers who don't have to do it are doing it, right?
Yeah.
It's for all those reasons. But, okay. This is great, but maybe we'll spend some time talking about digital assets, because one of the things Mark Ueda, when he was acting chair, and Chair Atkins has done this, Chairman Atkins has done this as well, is hit the ground running on digital assets. They repealed the staff accounting bulletin. They put out a bunch of new, guidance. So I know Nasdaq has been, and you yourself have been involved. I think you chaired or spoke on one of the panels that the SEC had. So maybe we could talk a little bit about what's going on in that space, what Nasdaq thinks could go on in that space. And, tomorrow we're going to have a whole panel on the crypto developments, including, as I mentioned, Commissioner Peirce will be here to talk about the role of the crypto task force the SEC set up.
Sure. I mean, when we talk about dynamic year, the main focus has really been on digital assets, especially during the interim acting period under Commissioner Ueda, and Commissioner Peirce has chaired the crypto task force. So since I think January, things have been coming out almost every week related to digital assets. So where are we now? the Crypto Task Force has done a great job of bringing different market participants together through the roundtables and meetings and the transparency that they provided about those meetings in terms of what topics have been discussed. And I think they'll continue to proceed with that process. There's been some, major changes, especially in the crypto ETF space. So just in September, there were generic listing rules that were approved by the SEC to allow more crypto-based ETFs to come to the market in a more quicker process. Instead of going through the 19B4 filing, you don't have to go through that process again. So now, today, we went from 2 crypto-based ETFs to about 15, and I think the SEC is going to take a look at providing more quantitative metrics as sort of the second stage of expanding the ETF world to allow for more crypto-based instruments. So that's one area. And there's been a lot of discussions around tokenization of securities, and that goes beyond just the equities markets. And so there is a lot of work being done on the Hill with respect to the market structure bill. People refer to it as the Clarity Act that passed the House, and there's a lot of work being done on the Senate side to come to sort of a final draft that can be approved. And I think the market is eager to have that version set and approved, hopefully by the end of the year. I think that's, with the shutdown, things have kind of slowed things down, but hopefully by the end of the year, we'll see. And that'll create more clarity in terms of who also has jurisdiction over some of these instruments. So there's been a lot of questions around, is it CFTC, is it SEC? How do they divide up the responsibilities? And Chairman Atkins also has brought in a lot of people, and CFTC and SEC have worked together to think about how to collaborate better so that there's no forum shopping, there's no regulatory arbitrage, and the whole financial ecosystem can work well together. And then on tokenization, a lot of conversations around that, and Nasdaq itself actually filed a proposal to allow tokenized securities to trade on our exchange. And I want to talk a little bit more about that in terms of additional details. What does that mean? It's a lot of people ask. So what that really means is, I think tokenization and blockchain technology is really an important innovation, and it can be used in many ways to facilitate the current system, including perhaps proxy plumbing. So we want to make sure we embrace that new technology, but we also want to make sure that it is embedded within the system of our U.S. Equities market system that has the structure, that has the proper guardrails, and that has the protections for the investors and issuers' expectations too, so that you have orderly markets and efficiency and transparency in terms of what the prices are. So that's the ultimate goal. And how do you do that? Well, we are allowing trading to occur on our exchanges, whether it's in tokenized form or non-tokenized form, and that would be interchangeable. Same QSIP, it's the same security. And where the tokenization takes place will be on the trading, on the settlement and clearing stage. So, our proposal refers to DTCC's role in terms of making sure that the clearance and settlement goes into place, and then the work with the broker-dealers and DTC participants to ensure that the investors are able to get the tokenized securities in their wallets. So we want to make sure that there's the same level of execution order, execution qualities, the information on the trading side feeds into the trading data so that everyone understands what the pricing is. And also, there isn't sort of this different versions of a security out there. It's the same QSIP, same token, same security, same beneficial ownership rights, et cetera, et cetera. So trying to provide a path by which this new technology and new structure can be incorporated into our very liquid and transparent markets.
I was going to, but go ahead.
No, I can go deep on this, but you go first.
First, I was going to ask what has to happen at the SEC in Congress to make this tokenization work? And does it have to be New York Stock Exchange, Nasdaq, everyone using the same system, or is it, so what?
Sure. I think the SEC has the proposal right now, so they'll put it into a notice and comment, or they have put it into the notice and comment process. It will continue to digest the information that is received from that. And I'm sure the SEC will also have some questions that we will need to address. So there's that piece of it. And then there's other parts of the ecosystem. I mentioned DTCC and other broker-dealers and different trading firms that will have to have their own system set up to facilitate this. So there's going to be some level of plumbing and updates to the system that different market participants will have to engage in. And then, of course, with respect to the broader sort of the bill, I think the more clarity that we get from the market structure bill that will be coming out of the Hill, I think will facilitate this process as well. Because there is definitely a convergence of digital assets and traditional equities and other financial markets coming together.
Can you do us a favor, Una? Let's go up a level from an altitude perspective. Help the audience understand, again, at a 20,000-foot level, kind of what the difference is from the Nasdaq's perspective between a tokenized security and then a traditional security that's held at the DTC on behalf of a big
Sure.
company.
Ideally, there shouldn't be a difference between, you could have a paper certificate, you could have electronic form of shares, et cetera. So ideally, they shouldn't, and they should be all interoperable, they should be interchangeable, they should be able to be traded within the ecosystem that we have. I think what we were starting to see in the market as sort of this new technology develops were some synthetic versions of securities being created, which is really a tokenized wrapper around the underlying stock. And I know some of these instruments are being marketed in Europe, but that's not really the underlying security that the issuer has issued. So, for example, there could be an NVIDIA, tokenized NVIDIA that's being marketed elsewhere, but if you look at it, it's not the holder, the investor is not getting the NVIDIA stock. They're getting a tokenized form that carries certain types of economic rights associated with that, but they may not have any voting rights. And there might also be sort of price disparity between what you get on with that kind of instrument versus what you get here in the U.S. with the underlying stock.
Almost like an ADR kind of
Exactly,
concept.
Like an unsponsored ADR.
Right.
Yeah.
I mean, that was a little bit of a setup because when I think about
Right.
tokenized securities, it is a sexy, cool idea. But
Right.
when you think about book entry only securities and compare it against tokenized, it's largely the same. It's similar, conceptually at least. And it's about the rails and where's the book and how does it all interact together.
And who holds the wallets and what is that sort of, process of making sure that the wallets are in place. So it's not that different from what we have. It's just a different form. Now, the promise and the benefits, because this is something that I get asked all the time. So why should I care from issuers? Why should I care from investors? I think by using this technology, there's, ways to facilitate on collateral management, different settlement pieces, proxy, providing clarity in terms of who owns what. So there's a lot of benefits that can come out of being, having these tokenized securities. Kind of like being on the cloud, you're able to do a lot more if your data is on the cloud to be able to use agentic AI and things of that nature. So I think that's where we're headed.
Great. We're dangerously close to the end of our time with you, unfortunately. But let me ask one thing on the shutdown. I know NASDAQ
He's like, I'm being told to stop. We're going anyway. I love it. Go.
1 minute, because we didn't get to this. Like, we're 36 days into the shutdown. I mean, it's still the policy that IPOs are not going to be listed if there's been no staff comment, right? Is that right?
Generally.
Yeah, generally.
I think it depends on
generally.
the type of sort of filing and type of the security and things of that nature. But for IPOs, I think the early October guidance from the SEC staff was very helpful. And it was meant to address issuers and companies who were very close to the finish line. And so we're working with a variety of different issuers in that sort of stage to see if there's a path forward
Okay, hopefully the staff will be back soon, but anyway, as the days click on, you can see pressure on that, so. Well, thank you so much, and I really appreciate your remarks.
Thank you very much.
Our next panel starts right away, so we'll welcome them up and get started.
Great, thank you.
Thank you.